Hello, friends. Today we're taking a look at Visa, ticker symbol V. We'll be looking at the last 5 years of performance of this stock. We'll look at the latest earnings report, what their financial outlook for 2025. We'll be looking also at the last 10 years history of fundamentals of this stock, and then we'll be trying to figure out a fair value for this with this stock. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. Visa is one of those stocks that a lot of people love. The growth community love Visa. The blue chip community love Visa. The dividend community love Visa. Visa is a tech company, technically. They help with the transactions of all the financial transactions between entities, between point of sales. Visa's biggest competitors, you could say, that is MasterCard. And lately, a lot of people have been putting PayPal as one of their competitive, which I know in the online community, there's a lot of discussions about whether PayPal can actually overtake Visa or MasterCard. If you have any thoughts or comments, you can put them down in the comments. The other thing that you can do whenever you have some time, please, if you like this, just click a like, subscribe, and let me know what kind of stocks you would like me to review after I'm done with this stocks. I'm going through all the stocks that I own. There are 14 of them, and I will let you know how they're doing and what I'm going to be doing with them. When it comes to Visa, in the last 5 days, they have gone up 1.6% in the last month. It's almost 11% up year to date. They're up 21%, and in the last 5 years, almost 71%. Analysts believe that Visa is still a buy, and the target price as of right now is the one that are showing over here is close to $320, which is pretty close to where we're at. They reported earnings on October 29th, and they will be reporting again at the end of January. They are trading right now close to 32 times earnings, and they pay $2.36 a year on dividend, which at this price is somewhere around 0.75%. Like I mentioned, they reported earnings on October 29th. They beat on EPS by 13 cents, and GAAP only 8 cents, but it's still a good beat. When it came to revenue, they beat, but it wasn't a big beat. It was $125 million, which compare with their quarter's earnings of 9.6 billions. It's really small. They are expecting to report at the end of January close to $2.66. Of course, this can change from now until then. And then they're expecting a revenue report of $9.35 billion. And in the last 90 days, they have 3 revisions up and 14 revisions down. I wouldn't worry too much about the revisions down because a lot of these revisions probably came after taking under consideration the lawsuit that some of the U.S. government and European governments have been suing them for fees and anti-competitive things. I wonder if the new administration here in the United States could help the stock, and by eliminating some of those lawsuits. Let's see how it goes. What do you think? Just write it down and let me know. Like I mentioned, Visa is one of those companies that I own. I have 5% of my stocks of my portfolio are in Visa. Um, I bought them at 270, an average of $270.80 per share. And from that moment until now, I am up 16.2%, which I'm pretty happy with that. I try to always get about 15% a year in all my stocks, minimal. When it comes to their financial outlook that they reported or that they gave for the fiscal year of 2025, revenue are expecting to grow in the high single digit to low double digit, which it's somewhere between 9 to, let's say, 11%. I'm probably going to be using somewhere close to 11% when I'm doing my analysis. And earnings per share growth, it says that it's going to be in the high end of the low double digit. So low double digit is somewhere between 10 to 15. High end, I'm guessing, is somewhere between 13 to 15. So I'm going to use the 14% whenever we do our analyzing. Let's just jump right into some of those numbers. When it comes to revenue, in the last 10 years, they have been growing at 13%. In the last 5 years, it has slowed down a little bit to 12.5%. And based on what they just predicted here, it probably is going to continue to slow down a little bit, maybe to, like I said, 11%. Earnings per share has been growing at 14% in the last 10 years and 14.7 in the last 5 years. Profit margins close to 50%, which is pretty good. Free cash flow in the last 10 years have grown at 13.5%, which is pretty good. Last 5 years at 16.8, but notice that in the last couple of years it has slowed down a little bit. 23 to 24, it actually went down. So that happens. It's a little bit cyclical, so I wouldn't worry too much about that, but it's something to keep an eye on. The 5-year average of their free cash flow yield is 3.4%, which is pretty good. Book value has been growing a little slow at 4.6% in the last 10 years and 5.6% in the last 5 years. Return to equity, it's close to 41%. Return on invested capital, close to 21%. And return of asset at 14.6%, which all of those are great numbers. So I normally look for ROE and ROIC of above 15 and return on assets of above 5%. So those are great numbers. When it comes to dividend has been growing, and this is another reason why this Visa is a beloved stock for dividend investors. In the last 10 years, they have grown the dividend 16.18% year over year average, and then in the last 5 years at 12. Payout ratio is at close to 25%, which is pretty low, which is not bad. Their debt has been growing a little bit in the last 5 years. They used to have no debt, so that's why there's no numbers for the 10 year. But the cool thing is that when it comes to the debt, the long-term debt, they can pay it with the average free cash flow in the last 5 years within a year and 3 months, somewhere around there. So 3 to 4 months. So that's they're very stable. I normally look for this number to be lower than 5. So shares have been they have been buying shares, been going down. I like this. In the last 10 years, an average of 2.9%, and in the last 5 years, 1.8%. So all numbers look great. So let's try to find a fair value for this company. Now, just want to give you a disclaimer. I am not a financial advisor. I am not your financial advisor. I'm just a YouTuber, someone that loves stocks, and I do this for educational purposes. I do this more for sharing my thoughts, and I want to listen and learn from you guys. So leave some messages down there and let me know where I'm wrong. Maybe I'm missing something. I am not responsible for any of your financial losses and gain. And just because I've made some money on Visa, that doesn't mean or guarantee that you will. Okay. So with all of that spill out of the way, let's look at some of my evaluation. So the historical multiple valuation takes the average or trailing 12 months of the per share numbers that we just looked at and look at the multiple average of the last 5 years, and it gives us a bunch of numbers. So based on those numbers, a fair value that I will be would probably be looking at the average because the way that Visa has been growing. So a fair value, I would say that is somewhere around $263 based on the average multiples in the last 5 years. So it could be a little bit overvalue. When it comes to revenue-based valuation, we take the revenue and we grow it at 11%, which is close to, 10.46, which is the average in the last 5 years, close to what they are predicting. Then we take the profit margin, we take the shares, the average 5-year shares that they've been buying. Gives us a future EPS in 5 years of $15.92 at a P of 32, which is what I'm using for all my calculation. It gives us a future price of $509.52. If we're collecting, if the dividend continues to grow, we look at those numbers. And we look at all those returns and divide it by 2, which gives me a 15% discount, which is what I normally look. I'll be looking at a fair value close to $261. When we use the discounted earning valuation, growing them at 14%, like we talked about, and a 32 PE, it gives me a number close to $300 as a fair value. If we do the payback valuation, which we grow all the future cash flows, growing them at 15, that gives me about $261 as a fair value. If we use just the standard discounted free cash flow, discounting it at 15%, which is what I use, that will give me a number. And here, what I'm going to do is I'm going to change it to 32. It gives me a fair value of $296 as a fair value. Owner's earning valuation. This is something that Warren Buffett uses, and that will be $372. When we put everything together, we see that a fair value for this stock is $292.13. That will be what I will think as a fair value, which is a little bit above where it's selling right now. And if you wanted to give it a, let's say, 50% margin of safety, that will be a $248, which, to be honest, that is, it wasn't that far away in July. So, but I don't expect it to go all the way down. So I will be more comfortable buying again if you were to get close to 265, somewhere around there. I will even be willing to honestly look at it as a fair value closer to 290, 280. So anyway, those are my thoughts. I don't know what you think. Just make sure that you subscribe and leave a like. Leave me a comment. Let me know if you own Visa, if you have a different entry point for it. And I hope that you enjoyed it, and I hope to see you in the next video.